everyone, welcome to another episode of the Mizuho Week Ahead. I am Xingyi, market economist at Mizuho Bank. The theme for the upcoming week is Murky Waters. Risk sentiments were soft last week, with US equities plummeting late in the week amid questions on the resiliency of US consumer spending. In contrast, Chinese equities rallied amid broadly upbeat corporate earnings, Chinese authorities' more conciliatory tone towards the tech sector, and prospects of a better US-China trade deal. Nonetheless, reports over the weekend that the Trump administration told Mexican officials that they should put duties on Chinese imports as part of their efforts to avoid US tariffs means continued geopolitical uncertainties. Against this backdrop, central banks are increasingly confronted with tough choices on how to navigate the future while taking into account evolving domestic risks. Accordingly, cautiousness has been ruling the roost. While RBA proceeded with its first cut for the cycle, communications have been hawkish. RBA cautioned against labor market strength, with Governor Bullock saying that the labor market was worth closer monitoring, for it could be an indication of a stronger economy and could disrupt the disinflation progress. Bank Indonesia returned to a pause following a January cut on rupiah stability concerns, with BI commenting that they have been conducting interventions almost every day to stabilize the rupiah. Nonetheless, Governor Wajio's announcement of the reduction of the reserve requirement ratios by as much as 500 basis points for banks that led to priority sectors effective April 1st was an indication of BI's easing bias as it continues to look for room to ease. RBNZ proceeded with a 50 basis points cut, the second consecutive jumbo cut, amid weak demand and disinflation progress, but alluded to smaller cuts ahead. Meanwhile, Singapore Budget 2025 was generous in its cash handouts as expected, with Budget 2025 running a basic balance deficit of 4.8 billion Sing dollars. A positive fiscal impulse will buffer growth headwinds ahead. This week, we have Bank of Korea decision on Tuesday and Bank of Thailand decision on Wednesday. We expect Bank of Korea to cut rates on contained inflationary pressures, weak growth, slower growth in house prices, and relative Korean won stability. However, Bank of Thailand's decision is a tougher call to make amid tussling risks. On the one hand, growth is weak with Thailand GDP in Q4 disappointing on dire private investment spending growth, and the services sector driving nearly the entirety of growth in Q4 amid fiscal transfers and tourism boosts. Meanwhile, inflation is contained. However, on the other hand, an elevated rate will support current household deleveraging efforts, and longer-term growth hinges on productivity growth, and an elevated policy rate ensures a robust hurdle rate for efficient allocation of resources. On balance, we think that odds are tilted towards a cautious cut. Looking ahead, geopolitical considerations will inevitably continue to cast an overhang on risk sentiments as markets tread murky waters. With that, we have come to the end of this episode. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.